Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Thursday and from the United States, we'll be waiting for very important economic data to be released. The CPI month-to-month for month of August and the core CPI year-to-year for August and the initial jobless claims and the continuing jobless claims and the federal budget balance for month of August. That's all for the economic calendar. We'll move on now to the numbers. On the last trading session of Wednesday, we have had a trading range from 1485 to 1497. Numbers are rounded and the market is still open. Gold spot is expected to print a close price above 1497. The market is still open. Please watch for this figure. Gold is trading in a bull trend above its all daily symbol moving averages except the 20 days daily symbol moving average about 1419.5 or 1520. The market is completely bullish above 1483. The 50 days EMA, the RSI readings on all the charts are relaxed, and for the supports levels are seen at 1483, the 50 days EMA followed by 1474 and 1450 the major support line, and 1496.6 it's cleared so far. 1505, then 1513, then 1520. That's all. We will be moving now to the trading strategy. As we said in our last video, the gold market is about to find its bottom. In the last trading session, the decline was limited less than the session before, and traders managed to defend the 50 days EMA from where market started its attempt to rebound. Market attention now is focused on the ECB meeting and the press conference which will follow that meeting. Market anticipates neutral actions by the European Central Bank, but some analysts and the gold cartel are anticipating a package of quantitative easing. From unbiased point of view, I stand by the gold cartel, as data from the European Union was disappointing since the last meeting held on the last July. Add to that the negative yielding sovereign debts and the inversion in the yield curve. If the Draghi signaled aggressive easing, gold will regain its lost ground because Powell cannot challenge Draghi. As simple as this. Technically, gold is trading a bull trend above its all daily symbol moving averages, except the 20 days daily symbol moving average momentum is neutralizing, and a sustainable move with a close above 1496.6. A spot rate will make you ask yourself where the buyers came from. If the remarks from Draghi were negative or dovish, as we usually say, gold will take off with next stop at the top of the year till date highs 1556 to the downside. 50 days EMA is providing enough support so far, and the area beneath of the 50 days EMA, it's a buying zone actually, with the bottom of 1450, the upper handle of the ascending triangle from which gold already took off initially to 1500 and above in the last round of the rally. One more thing to add. China, as we all know, is developing something called the Silk Road, and it's investing heavily in the infrastructure, manufacturing and refining of Iranian oil, and it's buying gold, physical gold, with huge amounts. All of this can be explained by one thing, that China is trying to find its path to become the leading country of the world, and I believe the United States is aware of this, and I have no doubt from a fundamental point of view that the United States will not allow China to buy gold as cheap as possible, as like 1300 or 1200 or 1400 or whatsoever. I believe gold will keep rising for this reason, more and more, okay, until the trade talks reach to a conclusion. That's all for today. Thank you guys for watching. I'll see you tomorrow in another video.